Ladies and gentlemen, good day and welcome to Q4 FY23 earnings conference call of Harsha Engineers International Limited. We have with us today Mr. Vishal Rangwala, CEO and Whole-Time Director, Mr. Maulik Jasani, VP and Group CFO, and Mr. Sanjay Mazumdar, Strategic Advisor. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Vishal Rangwala, CEO and Whole-Time Director. Thank you, and over to you, sir.
Thank you, and this is Vishal Rangwala, and thank you for joining us on our Q4 financial year 2023 year-end investor call. While our CFO, Mr. Maulik Jasani, will give more details about our financial numbers, I'm presuming that you would have had a chance to go through them already. And with that, in spite of very challenging times right now, considering geopolitical tensions, severe inflationary conditions in our key markets like Europe and North America, we have posted a fairly decent performance for the Q4 and the year. Our top-line growth seems well muted. However, that's a factor of commodity price adjustments, contracts we have with our customers. So accounting for that, we have recently grown at about 8% on a consolidated basis. I'm happy to inform that for us, the Indian market has performed very well, and it has reported a robust 20% around growth. However, Europe and then by extension our Romania facility has faced significant headwinds due to high energy cost and overall inflationary conditions, which has resulted into a lot of soft demands. Similarly, if you look at China, during the year we have seen lot of lockdown imposition by the government, and that led to reductions or challenges in demand side as well as the automotive slowdown there. So those areas, those countries, our market has remained muted. But however, there is, I'm happy to report that there is a significant reduction in operating loss in Romania in financial year 2023. If I talk about our key growth drivers, I'm happy to inform that from a medium-term to long-term perspective, those drivers remain very much intact. In case of bronze bushing, while our current market demand is well muted due to soft wind market in Europe and other places, we still have a robust order book and visibility. We are developing certain new products in this segment as well, and we remain confident that there should be a decent revival in second half of current financial year. We have witnessed a strong growth both in large bearing cages segment as well as from a Japan-based customers. Further, we believe that there is a significant capex announced by our customer base, who are global bearing manufacturers, and they're setting up a lot of capex in India. And we believe that we would be one of the major beneficiary of such cage requirements of these companies in the future. To that direction, Harsha has developed about 333 new products in financial year 2023, which indicates a very strong pipeline build-up going forward. And fairly confident that we can actually continue to grow in the market. While talking about financial year 2024, it's fairly difficult to give a precise guidance. However, on internally, we are trying to target about 8 to 10% global growth for all markets combined. And we are expecting that margins of Romania and China will be quite positive. And overall, we expect good margin growth for financial year 2024. Lastly, I want to share that we have incorporated or registered a subsidiary, wholly owned subsidiary called Harsha Engineers Advantage Limited. This will be the vehicle for doing next greenfield project in India for Harsha. And we are very close to identifying land and related formalities for execution of legal documents and so on. We will be making some appropriate announcement in due course related to this. With that, I will request Maulik Jasani to take you through key financial numbers from here on.
Hello everyone and good afternoon. Thank you Vishal for the business overview and updates. Now let me quickly update on the major financial numbers. For the quarter ended March 23, in our engineering business at a consolidated level, we have achieved revenue of rupees 325 crore against the rupees 297 crore in the immediate previous quarter and rupees 330 crore in the same quarter last year. We have achieved consolidated EBITDA of 56.5 crore in the quarter 4 of FY23 against 55 crore EBITDA in quarter 3 and 54.4 crore EBITDA in last year quarter 4. For the whole year in financial year ended March 23, the company has achieved consolidated revenue of almost 1300 crore in engineering segment against the 1239 crore in the previous year. Actual EBITDA is achieved at rupees 218 crore with 16.8% of revenue against 189 crore last year at 15.3% of engineering segment revenue. Our profit after tax for engineering business for the financial year is reported at 123 crore versus previous financial year of 96 crore with a growth of 28.6%. In our solar segment, we have achieved revenue of rupees 65 crore for the whole year and profit of rupees 0.19 crore for the financial year 23. We have achieved sales of rupees 30 crore in our bronze segment for the full year, while our business with the Japanese customers has grown by 34% year over year in last fiscal year, while precision stamping business has grown by 19% year over year. Our LSV business has grown around 15% year over year. Our capex during the year has been 74.4 crore at console level, which includes the work in progress also. For engineering business, our working capital cycle is 128 days for the year ended against 129 days last year at a console level. Our net borrowing at standalone level is at 225 crore as investment negative, while at a consolidated level it is 150 crore. Our gross borrowings at standalone level is 88 crore and 177 crore at console level. We have installed hybrid captive power and the project of 3.71 megawatt at Gujarat, which has been commissioned, and we will see the full impact of that project in the coming fiscal year 23-24. With this brief on the financial numbers, I hand it over to the operator for Q&A from the participants.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to only use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Nikhil Rungta from Nippon India Mutual Fund. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Am I clear?
Yes.
Yeah, sir, just a couple of questions from my side. To start with, on this Japanese customer where you mentioned like we have grown around 34% on a yearly basis. So as a percentage of revenue or bearing business, what percentage would be Japanese customer now?
Okay, so Japanese customers roughly contribute around 60 crore in absolute value in our total turnover of 1300 crore in engineering business.
This year,
FY23.
Okay. And here we can easily see a similar type of growth going forward as well, right?
Right, Nikhil.
because the base is low, no? See what is happening, currently we are still at 2% of the wallet share. So we are aiming at least 10-12% wallet share over next few years.
Correct. So coming to this bronze bushing, you have clearly indicated in your presentation an outlook that you see improvement only in second half of FY24. So if you can give some more detail and highlights on this particular business, because this bronze bushes was one of the key highlights during our IPO times as well. So what exactly happened and why is it that it's only H2 that you see recovery?
Yeah, so we spent FY23 actually ramping up the production at our end, making those investments, and all that was going on. So there was always, and we were replacing, import and that kind of situation. However, while we were doing this, we have talked about starting Q3 and early Q4. The wind market started softening, and so we have the business remains intact, but demand has softened. We are continuing. We have now become the significance in that segment to our customers, and that overall their demand has softened since last few quarters, and we have received indication from our customer that in Q3 and Q4 is likely this revival will take place. So overall, the business remains intact. What we had projected that we will do, at the full maturity of this bushing awarded business, we will do 125 odd crore plus business. That potential still remains intact. Short term, we are seeing a dip considering the wind market, and based on some indication, we are seeing that this will revive in second half of financial year 24.
This 125 being an annual target number at optimum level, yeah.
Okay. And sir, on this hybrid captive power project which we have commissioned, what type of benefit do we expect in FY24? You indicated full benefit would be visible in FY24. So if I have to put that into numbers, so what type of benefit would be there?
So as it is a hybrid project mix of wind and solar, our estimate out of this project is to have a 4 crore after-tax benefit for the full financial year.
Okay. And sir, coming to our
generation,
yeah.
But yes.
Okay. So coming to our new subsidiary which we have formed, Harsha Engineers Advantek Limited. So you have indicated that you will be investing approximately 350 odd crores also there. So where will this funding come from? Because whatever IPO money was there, I believe we used it to repay our debt. So where will this funding come from?
So Nikhilji, as I mentioned in my speech, currently we are having the net borrowings of 225 crore at standalone level. And if I see the gross investment is around 290 crore plus. That is the first. Second thing, this 350 crore is an enabling provision. We will do the investment in a partial manner in a tranches as and when required in next 3 to 4 years. And this 350 is also the best estimate we have as of now based on the need of the capex as well as working capital in that business. So we believe that we will have sufficient cash accrual also by the time we will deploy this much fund of 350 crore if we deploy fully 350 crore in that entity. And as I said, this is more of an enabling provision, and we will decide as the things will improve and we will start investing in the new entity.
So incrementally, most of
really taking too much of a debt.
Yeah.
It will all from cash accrual, mostly.
Okay. So can we say that our intended capex plan would also be similar number, or in our standalone entity also there would be capex?
There will be capex in our standalone entity, and this 350 includes the working capital need also of the new entity.
Okay. So last question from my side. On this itself, for FY24, what type of capex are we planning?
For FY24, including the greenfield expansion, it will be 100 to 130 crore.
Perfect. So that's all from my side. Thank you so much and all the best.
Thank you. We have our next question from the line of Harshit Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity. So my first question is that we have grown about 5% in FY23 in our engineering business. Now I assume here that the pricing of the products would have declined. So could you give a breakup between how would have been the volume growth both in India business as well as the overseas business, and how much impact would have been there because of the decline in price?
So it is, there were two things going on there, for the year. The first half of the year prices were increasing and then they were decreasing. So it is a little complex thing. Having said that, as I mentioned, we estimate that we have grown about 8% on a volume basis for the year. So that's our global estimate. On India basis, this number would be little higher. So we grew on absolute terms about 9% plus on engineering business standalone. And we estimate that about 12 to 13% would be a rough volume growth on a standalone basis, approximately.
And just to add, Harshit, here, it is also a combination of product mix. And as we speak in our initial commentary, the growth in bronze business, LFP business contributes in a different volume numbers. So it is always a mix of multiple things. But yeah, this is the best what we can explain.
Understood, sir. Very well, sir. So my second question is on our Romania and China facilities. So what were the full year sales and margins posted by these two companies? And how do we see Romania margins panning out over the next 2 years or so? Can we reach historical margin levels of around 7 to 8%? Not like right now, next year, but let's say by FY25, 26 kind of a time frame.
Yes, at the EBITDA level, we have a very strong belief that Romania is able to reach that historical margin 7-8%. We will definitely have a significant improvement on the margins from last year to FY24. And as you rightly said, in a year or two, we expect to reach that number, what you mentioned, 7-8%.
So last year, that is FY23, currently Romania was pretty low, so was China. And we were talking of very insignificant margin. So over the next 2 years, I would believe that we can reach about 8% in Romania. I think by 23-24, we will have to wait. But target is about 5 to 6%, which can go to 7 to 8% in 24-25. And China can easily do about 12 to 13% against current 6 or 7%. This is the way it will pan out. And that's why we made a statement that, both these subsidiaries should turn positive this year.
Understood, sir. Okay, what would be the quantum of sales that we have posted in financial year 23 at both these places?
Do you mean by quantum means what are the revenues from both, right?
Yes, sir. Yes, sir. The revenues in Romania and China.
So, revenue from both the entity put together is 360 CR.
Okay.
Roughly.
And what would be the split?
And the profitability at both the entity put together is 4.5 CR.
Okay, understood. What would be the split in these 360 crore that you mentioned? How much would be Romania?
On the revenue, China has achieved around 124 CR and Romania around 238 CR.
Understood, sir. Perfect. Thank you very much for taking my questions and all the best.
Thank you. We have our next question from the line of Amit Anwani from Prabhudas Lilladher. Please go ahead.
Hi, sir. Thanks for taking the question. My first question, again on Romania. So obviously, as you highlighted, that we are expecting a turnaround there, FY24 and FY25. So what is the, rationale, what is going to change there? And, right now, what is the contribution of semi-finished versus large cages, and what is the utilization volumes? Any more color if you could share on that?
Yeah. So Romania, I think the biggest issue currently, apart from the energy crisis and related some costs, still left, challenges. Bigger issue is the volume and the recessionary environment in Europe. Plus, combine that with, wind market challenges overall globally. And from a semi-finish to, finish cage, I think we are still at about, I'll check, but I think 80 plus. Yeah, 80 plus on the semi-finished side and remaining on the finished cage side. So what's going to improve definitely is volume, both on the semi-finish and finish side. On the semi-finish side, it's a competitive market, and it is driven by volume. And we are not at the optimal volume considering, very soft demand in the whole year for Romania. So volume improvement even on the semi-finished side will help on the margin, as well as the cage finished product has significant better margins, and that we are expecting to grow significantly. We had grown to a level and then it has kind of crashed or almost reduced significantly because of this demand situation. So combination of both is what we believe that we will be able to achieve margins and the directional growth we are expecting.
Sure. What was the utilization this year?
On the spring side, it is around 60% of our current usage.
Yeah, I think more like for 50% on semi-finished side. And on the finished side, product cage side, almost 40% around that, 40 to 50 somewhere in there. So very low utilization currently.
Right.
And I'm talking about recent couple of quarters.
So volume growth. Yeah, go ahead, sir.
No, it's okay. Go ahead.
Yeah. So volume growth, which you are mentioning, is it from the same customer, or are we, diversifying from where exactly we are thinking that the volumes will come back? Are we expecting scenario has completely started improving there with respect to energy prices or volumes? What is the, expectation coming from?
So
I'm sorry to interrupt, sir. You're getting an echo.
Yeah. Let's try again. Maybe it will go away.
Yeah.
Okay.
It
It looks
sir.
better now. Yeah. So, from a volume growth point of view, we are expecting actually to grow with existing customers. We are expecting actually that some of the business which is soft today will improve, which is already developed, and we are a regular supplier for that business, but the demand is significantly muted. And the second part of it is that we are actually adding new customers in specifically Romania or the European region. Third element is that we are also closely working with our customer to outsource some of their cage demand. So the growth will come from a combination of all three for us specifically on the finished cage side.
Sure, sir. My next question is on wind bushings, which we are expecting from H2, the demand will come back. So just similarly wanted to understand, are we really expecting that within 6 months things will be normal? And how much was the bushings contribution for FY23? And any expectations for 24-25?
So the FY23 bushing contribution, as I mentioned in my speech, is 30 crore for the year. We are short by around 10 crore of our expectation. And for the guidelines, let Vishal also give you inputs on the market estimates and the guidelines.
So, see, right now we are expecting we are going to continue to grow in the bushing market. We are expecting to do a revenue of about roughly 45 odd crore for financial year 24. This is our very early estimate, and we have received some indication from our customer for revival of wind business. So we feel that we could potentially improve on this number, but it is very early right now. Definitely, we have already accounted for some improvement in business in second half based on the indication we have received. And then we are closely watching the market and how it is behaving, and very hopeful that wind market will revive in second half, and primarily calendar year 24. It is based on our customers' indication looks very positive.
Sure, sir. My last question.
Yeah. Very conservative estimate. Our earlier estimate was actually aggressive. So 30 to 45 is again quite conservative. And it can change as we move ahead.
Got it, sir. So last question on if you could share the revenue contribution from bearings, stem component, bushings, castings for FY23.
We have disclosed what base we could disclose.
Sure, sir. Thanks.
You already have the bushing number.
Yeah, we have given the best possible disclosures, Amit. Yeah.
No worries. Thanks.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Pradyumna Chaudhary from JM Financial. Please go ahead.
Yeah, hi, sir. So, 3 questions. First is, my understanding is that currently 38% of our engineering revenue comes from India, right? So, I wanted to understand, what is really stopping us from growing this pie? Because ideally, India is a faster growing market, and this pie should be. Is it possible to increase it much more from here in terms of contribution to total revenue, or have we already captured most of the opportunities on the Indian side, considering our high market share here? Second would be, why is the wind market slow in Europe? Considering all the energy crisis talks and everything, so you would usually expect that all these alternative sources would have a good demand right now. And third would be regarding the low margins in our foreign business, foreign location, China and Romania. So I do understand the utilization part, that we are operating at less than ideal utilization, but energy crisis and all these things, usually my sense is, considering that our product is a very low percentage of the total bearing cost. So I would expect a better pass-through of the other issues like the energy issues or raw material prices. Like I would expect a higher pricing power with us, considering how critical our product is, and at the same time how small its contribution to total bearing cost is. So what is really happening on that side? These are my three questions.
Yeah. So to start with your comment about India. India is a 38% for us, as you rightly mentioned, and it has grown very significantly for us last financial year, almost to the tune of 20%. India as a market. So we are very, bullish on India specifically. I talked about, how our customer setting up a lot of capex over next 2 years, and so this is a very positive effect of China Plus One. So we are quite bullish, and we will continue to grow at least a double digit in India. But at the end of the day, it is still 38-40% of our market. So obviously, our overall growth is driven by how the globe grows, and that kind of creates opportunity as well as challenges. I've talked about beyond India, there are a lot of opportunities on insourcing to outsourcing. Building our portfolio with Japan-based customers or Japan origin companies. So all those remain an additional opportunity for us, which we are working, and fairly confident that we will outpace the global growth in a significant way for bearing, specifically bearing side. And then additional growth will come in from bushings and few other products we are working on. Now, coming to your second question about the wind market, again, that's something I'm not in a position to actually qualify anything specific. Based on what I've heard, wind market is driven and significantly supported by the government directives, subsidies, and all that, and potentially during COVID time, a lot of funding went into other directions. So that's an explanation I've heard out from our customer, but again, doesn't make me an expert here, so difficult to actually say why. But we also believe that directionally what you mentioned, that this is something will grow, eventually turn around. And definitely if you look at global projections from various consultants, or the predictions from various government considering the carbon neutral goals, zero CO2 emission goals, and etc. Absolutely, we are very bullish on this market, and in a mid to long term, we are very confident that it will grow, and we will win a lot of opportunity within that. On the third, aspect of low margin, I'll break this down into Romania and in China. Romania, we have talked about this is we do a lot of 80% plus of the revenue is coming from semi-finished products, which are casting, relatively energy intensive products. So that's where the volume matters, and the margins are low at the EBITDA level on optimal basis, what we are expecting is about 6% margins, 6 to 7% margins on the semi-finished side. On the finished product side, we are expecting a good 14-15% EBITDA level margin, and that is also currently muted. And as we mentioned, almost it is down significantly from its normal cycle. So both those will come back, and so thereby Romania margins will significantly improve. Obviously, the reason for low number is semi-finished. On the China side also, a very up and down cycle, very challenging market. And specifically last year, we have talked about there was a significant one-time cost related to reprocessing slag and that equipment breaking down. And during COVID, we didn't get an approval to restart that equipment, and then ultimately resulting in selling that inventory at loss. So those were the two very distinct reasons for us to have a relatively lower margins there. But again, that's the reason gives us confidence that they will actually do much better. They have actually done much better. We have done a year-over-year improvement in FY23, and we think that this improvement will continue in FY24 and beyond.
So just to add quickly on the India side, as you know, we have a very lion market share, frankly, with all the key major customers that really matter, the global ones, where it is 80-85% plus. Lot of new investments are coming, and we believe we should be the major beneficiary in those investments, and a significant business that is expected to come. But as Vishal explained, India is actually a little relatively still a smaller market, and therefore we grow with whatever capacities are growing either for India or for outside India. And on the margin side, just very quickly, there was a continuous process of pass-through, which we went for most of the year with always a lag. So therefore, what happens that when a lag, the impact is hit in your P&L, but the benefit moves a little low later. And therefore, the fixed overheads are on the higher side, therefore margins appear to be very, very low. Having said that, if you look at Romania 21, we did a decent margin in Romania. I think that is why we feel that now it seems that the pace of inflation as well as cost increase has slowed down a bit, and therefore the indications are that Europe should start reviving, and we are hoping for the best. But as we all very clearly said, we are closely watching. Let us go as we move ahead in the year, and probably we should have more clearer things to say.
Understood, sir. Just one follow-up here. So in Romania, you said 80% is coming from semi-finished products. So what is the plan over there? Like, can we move up the value chain? Like, how much of this 80% can be reduced to maybe a much lower number, so that a lot of it is from finished products where the margins are much higher? So, and second would be, so considering this cost pass-through thing which you mentioned, so maybe one quarter, I'm not asking for you for the exact quarter where we'll start seeing improvements, but maybe in the next couple of quarters at least, if the inflation situation remains similar, we should expect improvement, right? Because that's when most of the pass-through kicks in.
I think on the first one, in Romania specifically, our means of increasing the finished percentage is actually growing in the cage market, and we are fairly confident that we will grow there. By virtue of that growth, we expect that semi-finish will become more like 70% and going forward 60% when optimal volume comes in for finished products. We don't intend to reduce the semi-finish per se directly, but we continue to work with our customer to go into semi-finish to finish portfolio. So that journey will continue. On the pass-through, I think we feel that most of the pass-through has happened, and in Q4, most of the lag effect was addressed and removed. Unless prices now go further up or down, we expect that this Q4 is a good indication of a stable situation, unless, again, as I said, if it changes further.
Understood. My only concern is there's been a lot of headwinds we've been facing as a business, which is fine, like because of the global situation and yet there are a lot of long-term tailwinds in our favor, as you explained even during the IPO. It's just that one is not seeing the numbers right now, so that's my only concern. But all the very best for the future. Thank you.
Thank you.
Mr. Chaudhary, does that answer your question?
Yes.
Thank you. We have our next question from the line of Shirom Kapoor from Prabhudas Lilladher. Please go ahead.
Hi, thanks for the opportunity. This first question, you mentioned you saw about 19% growth in your stamp components business year on year. So what is the value now on an absolute number?
So on the stamping business, our volume is 45 crore for the year ended.
Did you say 45 crore? Sorry.
That's right.
Yeah, 45. Okay, great. Thanks. Thanks. Second is regarding your solar EPC business. What's the outlook? We saw about 82 crores in FY22, about 69 crores or in FY23. What's the outlook here? And we also saw about 1.5% margin. So what is the margin and revenue outlook for this for the next few years?
Yeah, so it's difficult to exactly clearly define that. There's a little bit volatility and the dependence on regulatory requirement. Guidance and all the subsidies which are coming in. But in general, we expect it to be in the range of 60 to 80 crore top line, and marginal improvement or marginal bottom line is what we are expecting right now. Obviously, we think that there will be some improvement from last year on the bottom line also. But beyond that, difficult to predict.
And frankly, as we have been maintaining in the past, it's frankly not an area of growth, neither from a capital allocation standpoint. And, it will just continue to be a little bit in this range bound with marginally positive or virtually, so it's not an area where we are focusing, and therefore, this is what it is, actually.
So are there any plans on maybe eventually divesting from this business to purely focus on the engineering side of things?
We are open to those options and looking at it, but right now we don't have a clearly defined, final plan in place.
Understood. And my next question is on the Harsha, the Advantech, the new subsidiary that you are incorporating. When do we expect? Could you give us a provisional timeline on when this will be set up and when it will start contributing to revenue? And what's the potential?
So the broad plan is we will have a setup completed during this financial year. Yeah. And we are working in that direction.
So as we explained, the subsidiary has already been formed. The land acquisition process has started. So hopefully next 1 or 2 months that should be over. And then by that time, we will frame and conceptualize the whole phase-wise capital expenditure program, capacity plan, etc. So in next couple of quarters, things will become very clear to you. But this project will take minimum couple of years, 1 to 3 years in a phased manner.
Understood. Thanks a lot. And just one last question is on, within China and Romania, if you could provide us with what the volume growth has been. I know you gave us the revenue numbers. Maybe if you could provide us with the volume growth, and within Romania, if you could give us a split of volume growth between the semi-finished and finished casting.
No, so I'll tell you, first and foremost, volume is a misnomer. It's very difficult, and we will rather be happy to go with the numbers for the very simple reason that it is a function of a vast multitude of products, some of them very high volume, some of them low volume. So I think it's not possible for us to give you any specific breakup of volumes within the product groups.
Okay, sure. But at least on an overall level between China, and at least in China, since there's one.
No, in fact, there is no volume growth either in China or in Romania in 23.
Okay, got it. And the 20% of growth that you mentioned in India engineering, the revenue I see grew by about 10%. So is this 20% on a volume basis?
It's India market. Yeah.
So the market overall has grown 20%, not necessarily Harsha's revenues in the market.
No. Harsha's revenue from Indian market has grown 20%. The standalone company, which is actually exporting to multiple locations beyond India, that has grown about engineering part of it 9.5-10%. As a standalone company, but the Indian grown almost 20%.
Okay, got it. That's all from me. Thank you so much and best of luck.
Thank you. We have our next question from the line of Parth Patel from Unifi Capital. Please go ahead.
Hello. Thank you, sir, for the opportunity. So I have 2-3 questions on the CapEx side. Yes, sir. So I just wanted to understand that you are doing the 350 crore CapEx over the next 2 to 3 years. So it is pretty big compared to a balance sheet size. Okay. So first, I wanted to understand the rationale behind the greenfield CapEx, because I think we are at 60% capacity utilization in our existing capacity. So is there an option to expand using a debottlenecking or brownfield expansion in the current facility?
Yeah, so Parth, basically this 350 crore, what we have mentioned, is a total, potential investment, including working capital we are projecting. And again, this is, as Maulik mentioned, that this is an enabling provision we have done. Now, this is the maximum, we think that this company will need in terms of CapEx as well as working capital over next 2 to 3 years. Now, our macro plan remains 100 crore plus investment CapEx over next 3 years. In general, that is still the direction. And some of the CapEx will still go into our existing facility for debottlenecking, as you rightly mentioned. And this, that will continue, and we will try to utilize more and more capacity even within the existing facility. Now, if I look at various capacity within our existing facility, there are certain capacities which are highly utilized and they need additional expansion, and we don't have existing space, so we have to go with a complete greenfield project in that case. And some of the capacities where there are opportunities to continue to grow within these 2 campuses, and which we will continue to do by investing in some debottlenecking equipment and all that. So that's the thought process.
And Parth, just to add to what Vishal explained, you see, from my present plants that I have, I can go up to maybe 1,700-1,800 crores. Now the problem here is it takes couple of years for you to set up a new plant. We are working on several directions of growth. It's a long-term story. So by the time business is available, I have to have the capacities. And that is why this greenfield. Existing plants, I don't know whether you have seen, but if you have, many people have visited us, they have almost chock-a-block in many production areas. Some of them are so tight that we hardly have any scope or any room for expansion. So greenfield is more from a futuristic next 3 to 5 years rather than 1 or 2 years.
Okay. And then just on a follow-up, then what will be your asset turns on this new greenfield capacity? Because there may be some technology improvements and some kind of automation. So the asset turns will be better than the existing capacity. And second, what is the product mix in this greenfield capacity? Will be a completely new kind of product like larger bearings? How will be the product mix there?
So Parth, as a blended asset turn, we continue to maintain it at 1:2 and will not be able to specify it on a product category level. And it will continue even in the new greenfield facilities on the fixed asset spend, it will continue to be a 1:2. While on the what we will grow over there is, as Vishal mentioned, wherever we have a additional business coming and there is no capacity here, that additional business will go to the new facilities as well as diversifications where we are working on our core competence. Will not be able to provide much insights beyond this as of.
I mean, we are still at the planning stage, so maybe we'll get back to you within next couple of quarters on the exact plan.
Yeah. Okay, sure. And thank you. That's it from my side.
Thank you. We have our next question from the line of Shailesh Khatri, an individual investor. Please go ahead.
We have installed capacity of 2.7 megawatt TG at Gujarat, correct? Hello?
Okay.
What is cost of that WTG?
I will not be able to provide one-on-one cost.
Okay. We'll have to do it offline. I'll have to check.
Yeah. Also, I don't have numbers here ready.
Okay. So is there any payback period, something like that?
For the new plant you are saying, then I say, sir, every year we will able to generate 4 crore rupees for the new hybrid power plant which we have said.
Shailesh, are you talking of hybrid or you're talking of my existing half megawatt windmill? We are a bit confused.
Yes. I am talking about only 2.7 megawatt, the megawatt TG at Jamnagar location. This is installed at 31st March, correct?
Under this hybrid policy, generally the payback would be around within 5 years because there is no wheeling. The benefit of a better generation and no wheeling.
Okay. And is there any subsidy available from Gujarat government for this WTG?
Sir, it is as per the Gujarat government policy.
No, there is no subsidy. No subsidy.
Nothing much. Yeah. Just what Sanjay has said about wheeling policy as per Gujarat government policy.
See what happens, the hybrid has the advantage. Solar generally generates for 8 to 10 hours. Wind generates for 24 hours. So that mix creates an overall improved power factor. And that is better.
Okay. Thank you, sir.
Thank you. We have our next question from the line of Jason Soans from IDBI Capital. Please go ahead.
Yeah, sir, thanks for taking my question. I just wanted to ask you, can you hear me? Yeah. So, sir, I just wanted to ask you, in terms of a global market share, in terms of brass, steel and polymer cages, we are at 6.5%. And I see, of course, there are 2-3 main players, but it's a very niche market. So you have opportunity to, garner a lot of market share, And so there is a 79% pie which is still done by others or, probably it might be an unorganized segment or done by bearing manufacturers in-house. So just wanted to your sense and understanding that how fast, we can grow this market, because in a niche space and a very, very niche competition is there. So, just wanted to know in terms of a long-term growth perspective, how fast we can grow this market, and what percentage is an unorganized market, or probably we can take market share away from them because we being an organized player on that perspective.
So Jason, thank you for your question. Now let's first put this maths a little clearer.
Yeah.
So when we talk of a 6.5% market share, it is a function of 2-3 subsets. So first, the market per se is about, say at 5%, we are talking of 5 billion market. About 60% as on today is about organized. Organized means those top ranking 6, 7, 8 major players with whom we are working. Now within that, about 75% is brass, steel and polyamide. And after that, the next subset is about 40% is still in-sourced. So ideally speaking, different markets, different companies, we have different strategies. So if I look at India, we have a very large market share and we continue to maintain that market share. Outside India, my wallet share would be anywhere between 10 to 20%. If I look at Japanese-based customers, it is 2 to 3%. Within even my existing very well-established players, if I look at large size bearing cages, it is about 2 to 3%. So multiple opportunities exist. There are multiple strategies, of course, very clearly. Keep on increasing your wallet share from that continuous process of outsourcing to insource. I mean, insourcing, say outsourcing. And within that, lot of focus on large size bearing cages, lot of focus on Japan-based customers, plus to add India opportunity, China plus one, new plants coming in. As and when they are ready, we are ready. So it's a multiple host of factors that keeps me growing or makes me confident that over a medium to long term, I should be able to do at a CAGR which is 6, 7, 8% at which the industry is growing.
Sure, sir. Thanks for that. And so just wanted to understand, in terms of large cages, can we service them only through Romania or through the India business as well?
No, we are doing it from India as well. Very well from India.
Okay, from India as well as Romania.
As well.
Yes. And so just wanted to confirm these volume, you said volume growth was 8% on Concall basis and 12 to 13% on an India basis. Is that right?
So approximately that's correct. Again, these are not the, want to qualify that these are not absolute numbers because, we have a lot of product mix and we are just creating a blended kind of a volume growth.
Yes, sir. So actually there was a previous question. So because 5% is your revenue growth and 8% is your volume growth, but I understand that the semi-finished castings will have, a lesser realization. So it's a blended cost. It becomes a 5% revenue growth. Is that right? I mean, my understanding would be right. Because of course cages will be a bit higher margin product for you. Yeah, a higher margin product for you. Semi-finished castings.
Semi-finished, but on a global console basis, you are right.
Yes. Okay. Sure, sir. So, sir, that completes the questions from my end. Thank you so much.
Thank you so much. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. As there are no further questions. Yes, sir. Any closing comments, sir?
So thank you very much for attending this call, and we are just to summarize, we are very happy considering overall market conditions where we are today, and very bullish on a mid to long term growth trajectory for Harsha Engineers. And with that, I appreciate everyone attending the call, and thank you very much. And
have a good evening.
Have a good
Thank
evening.
you.
Thank you.
Thank you. On behalf of Harsha Engineers International Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.